Stocks are in a bubble, AI is taking over, and everything is about to crash or not. You came here for the truth, so let me unveil that for you. My name is David Quintieri. I am the Money GPS, the guy who predicted the exact bottom of the stock market in 2022 and so many other instances. And I want to show you what's happening today, breaking it down into three parts: the issues, the changes, and how to actually take action on it. AI right now is everywhere. Everything has AI in it. I saw a toothbrush with AI in it. But what do you have to do with all of this information? Your retirement account, your 401k, your actual hard-earned dollars are there at stake. Let's break it down. Okay, the first thing we want to do is we want to talk about those issues. Okay, so the obvious one, the elephant in the room is AI. Is it a bubble? Well, you can see here, tech stocks post a second straight decline. Worries about the cost of artificial intelligence weigh on major indexes. This was actually back on the 24th trading session. The $100 billion deal sparking fears of a dotcom-style crash. Every day we are seeing new developments in AI. OpenAI is going to invest money with Nvidia. Nvidia is going to invest money with OpenAI. Wait, what? So I give you $100, you give me $100. We're now worth $100, or are we worth zero? How does this work? These companies are getting massive valuation increases based on the money that they're investing in each other. But it's this circular pattern, which is kind of throwing things off, and it's really, really similar in some eerie ways to the dot-com bubble. It is different. This time is different, as they say. But you got to understand, this is really familiar. I've studied it a lot. There's some very unusual things that are happening today, and they always do this because the insiders can squeeze more out. When you go public, that's your chance to finally be able to milk that cow. Finally, you're building up. You go public, that's your chance. And now that's what these companies are doing. They're finally reaping the rewards. I don't blame them in a sense, but there's something underlying all of this that we got to be careful of. Look, sure, there's a risk of a bubble in AI stocks, so invest in them. That's according to Wells Fargo. This is the type of rhetoric that we had during that period of time. Oh yeah, it's a bubble. Oh yeah, absolutely. So keep putting your money in. Now, I'm not saying that you shouldn't invest in them. Oh my goodness, there's fantastic names out there. But we've got to temper the expectations. We've got to step back for a minute and we have to assess the situation. We'll talk about that in parts B and C. Look, you can see what Jerome Powell had said and the actions that they are taking. This is very important. The Federal Reserve cut interest rates once. We know that. They intend on cutting interest rates again. That is likely to happen towards the end of October. So at that time, perhaps we'll get another 0.25%. And then there's another FOMC meeting that comes towards the end of the year. So that could be 3 cuts before the end of the year. Jerome Powell, as they say here, has this delicate balancing act. And what they have to do is make sure that they cut interest rates enough to ease the burden on the national debt and everything else, but at the same time, don't create too much inflation. People don't understand how this all works. There was actually a group of people, thankfully, I don't think they're still around, but they think cutting interest rates, printing money, does not actually create inflation. It's mind-boggling to me. I'm glad I'm not hearing that anymore. And if you are, let me know in the comments. Please. I love jokes, and I would love to hear some of that. Okay, so what's happening right now with Jerome Powell, with the Federal Reserve, is that they're seeing what's going on in AI, they're seeing what's going on in the economy, and they're never going to be the ones to say, don't do that, we're going to stop that. They don't do that. You remember Alan Greenspan, irrational exuberance. They went on for years after that, and all the most extreme stuff happened after he was saying irrational exuberance. That means things are going to get crazier than you've ever seen before. All right? So the markets are getting a little bit worried right now, and for good reason, because valuations are in extreme levels. You measure in any different way. The Buffett indicator, you look at it in PE ratios, it doesn't matter. It is going crazy, but that doesn't alone make a market crash. What are one of the big signs? The big signs, and what are the things that are happening right now? We are seeing the devaluation of a currency. And during this period when there's a devaluation, certain things happen. One of those, the most obvious, is gold. Gold at record high as further Fed rate cut hopes spur investor demand. Whenever there's the concern that the currency is going to lose value as a result, just by the nature of it, gold goes up. Now, the problem with this is that gold has basically been going up in a straight line. That is not good. I would put this in here, little caveat that gold was subdued for such an extended period. I mean, gold's going to be 5,000, gold's going to be 10,000. We heard all these numbers, right? Never materialized. So it was really down in this 1800 range, somewhere around there. It was just chopping around for the longest time. And then they started to do this interest rates. They started to think, okay, we're going to, tighten our belts a little bit. And then gold started doing well and well and well and well. And my goodness, that's 3,700. 3,700. And why is that the case? I mean, you could invest. If you're an investor, you have choices to make. Where do you put your money? Would you like to know? Let's go. Okay, that's part C. How do I take action? Now, it depends on your circumstance. This is something that we talk about very much in depth on the Finance Friday. But I'm going to do my best here to give you guys some information that is tried and true. So what do we know for sure? That's the first thing. I call it the 30,000 foot view. We talk about it extensively Finance Friday. You got to have a 30,000 foot view. Looking down, what do we know for sure? The Fed is going to likely cut interest rates again. If they're cutting interest rates, if they're pumping cash into the system, if inflation is likely to be more of a worry, like is inflation going to go away, or are we probably going to have more inflation? Pick. Okay, so let's say I believe that there's going to be more inflation. Whether I'm not saying hyperinflation, I'm just saying more inflation. Okay, inflation. Well, then real assets are likely to perform well. How well? Well, that all depends. There's so many factors, things that are coming from the outside or inside. But we know that usually real assets do well when there is inflation. And so that's our first thing. So gold looks super attractive during these circumstances. Fed's daily says further cuts will likely be needed. And gold is still very much bullish in the longer term. We've seen that. Okay, because people are concerned. Whenever there's concern, whenever there's a destabilization, whenever there's war, whenever there's concern of any kind, gold tends to do well. Let me interject and say the fact that it's gone up in a straight line means that it can come down even faster than it went up. So always keep that in mind. At the same time, what is your current portfolio looking like? Oh, I'm 80% precious metals. Okay, you are really overexposed to those precious metals. You're not getting any cash flow from that. I would be very cautious how much you put in. Okay, because you might think, okay, long term, I'm good, but we don't know what happens in the middle. There could be some sort of bear market. It could be an issue where your investment is down significantly depending on the positions and when you bought in and so on. But understand the value of gold, why it's there. That gold hasn't changed. It's a lump of metal. It's the devaluation of the currency. And the other way to look at this is, if you see it here, Wall Street's record rise spurs growth of covered call strategies. This is complicated, not for everybody, but just understand, look, with stocks near record highs, investors see opportunity to diversify concentrated positions. Use of covered calls gain traction to hedge risk, provide income, and manage tax liabilities. An estimated $15 trillion of stock holdings ripe for covered call strategies. And so this is something, like I said, it's a little bit more complicated for the average person. Maybe won't be able to take advantage of it, but it's good to understand this, okay, at the very least. This is something that Profit Market, the YouTube channel Profit, as in Prophet, Profit Market, a friend of mine, he operates that channel, and this is his strategy. This is the one thing that the last time I spoke to him, this was became his bread and butter, and for obvious reasons. When we have stocks rising, we could still have downward protection, and there's not enough protection. People usually don't buy enough insurance, right? But that's where we can look at this. So you have the gold, tried and true, real assets, but we have to protect the downside. That's what this is. That's part C. Okay, so we looked at the issues. We cover them here. Part C is how do we take action? Depends on your portfolio, depends on your circumstances, and so on. But that's the way this video has gone. All right. This is something that I'm going to sort of take the data, and so it's not just 1, 2, 3, 4, 5. Okay, end of the video. It actually is a full circle coming with A, B, and C. Actually, it should be in a circular pattern just to give you a look at how this works. I am the Money GPS. My goal is to empower you to become your anchor with all the news, all the insanity. There is the possibility that I will be coming back and doing many, many more regular videos. Try to keep it as condensed as possible, and we'll see what happens. I really want this channel to be the anchor so that you know that you're getting the absolute best of the best here. No fluff, no BS. In order to support me, hit that thumbs up. That's all, okay? Hit the thumbs up button. You're supporting me. Put a comment there. I'm trying to reply to basically everyone that I can. And if you want more information about the Finance Friday, simply go to themoneygps.com/live. There'll be a link down there. People are joining, more people now. We got new people joining in all the time. If you are interested, I would love to see you in there. Click on that video. It's a very short video and explains what that's all about. I want to thank you for being here. I'll see you on the next one. Take care.